What's good, y'all? So today I'm going to break down a trade I took on Friday that netted me about $336 trading the micro NASDAQ futures. So let's get into the charts. So looking at the charts going into Friday, you can see this candle here, this final, this down close candle. I'm on the daily chart. So on Thursday, the market closed, and the first thing you notice is that we are well above our previous all-time high liquidity. With a strong close above it here at 21,335. We were now trading about 100 points above that. And we also formed a buy side imbalance, sell side inefficiency, fair value gap here once we closed on Thursday. So once that happened, I was looking for price to potentially return back into here and before sending us higher back into our all-time highs. So let's go down to an hourly chart and see what happened on a smaller time frame. So as you can see, when the market closed, here's the 4 p.m. candle close. I'll go ahead and fast forward into the 6 p.m. candle. The market opened here at 6 p.m. Thursday night going into Friday, and we traded into that that daily fair value gap, buy side imbalance, sell side inefficiency that I just marked. And you can see once we traded in there, the market, pushed higher, and we kind of consolidated for a little bit. And then here we had a push lower before the market made one final attempt to go lower, but it failed to take out this low at 6 p.m. This low here was failed to take out at 8 a.m. We did not take that low out. While if we go to the S&P 500 on the same time frame, we can see that the S&P 500 did take out that low. So you see this candle here. This candle here is the same candle here at 8 a.m. on the NASDAQ on the right and the S&P 500 on the left. This 8 a.m. candle is the same candle. So you can see that this candle's low took out this 6 p.m. low on the S&P, while the NASDAQ's 8 a.m. low did not take out the 6 p.m. low. And this was when the non-farm payroll data came out. So at the beginning of every week, that Friday of the first Friday of every month, I should say, we have non-farm payroll economic data that comes out. That's always a very volatile piece of economic data that essentially will cause a lot of volatility in the markets. So when that happened on the S&P, we wicked down, made a strong push below to grab the stop losses below the 6 p.m. low, while the NASDAQ didn't. Whenever that happens, that's known as an SMT. So we had an SMT divergence on the NASDAQ and the S&P 500. That's essentially an indication that the market is potentially headed in a certain direction. When two correlated assets fail to do the exact same thing, that's an indication that we're headed in a particular direction. In this case, the NASDAQ failed to take out the low that the S&P 500 did. So that made me extremely bullish on the day. And I was now going to be looking for long opportunities going into the market open. So going back to the NASDAQ, what I also noticed on the NASDAQ was that we had a dealing range. A dealing range, if you've seen any other video I've made, I've talked about dealing ranges before and why I love to use them, right? So a dealing range is essentially any price run that takes out a high and a low. So you can see this 12 p.m. High where my candles notated, that's all-time high, to this low at 6 p.m. We took out this high at 9 a.m. and we took out this low on Wednesday at 1 p.m. in this one price run. So now that essentially certified this as a dealing range. So I like to put a Fibonacci retracement to grade that out to see where the 50% level or the mean threshold of that price run could potentially be. So I will mark the 50% level here as the 50% of our dealing range right here at 21,496. So whenever we have a dealing range, you want to be buying long in below the 50% level, right? That anything below that is considered a discount market, right? While if you were going to be short, you would want to be shorting above the 50% level of this price run, right? So that's a premium market. So it makes sense, right? If I want to be long and I want to make money, I want to buy low and sell it high. If I want to be short and I want to make money, I want to sell it high and buy it low, right? So it makes sense in the logic behind why you want to be buying 50%. And what the market does a lot of times is the algorithm is coded to return back into the 50% level to load up before going higher. Or it'll return higher into the 50% level to load up before going lower. So going into our 1 minute time frame, we can kind of see what the market looked like going into the opening bell at 9:30. So first thing you'll notice is, like I said, we had this 9 a.m. data. This became our data lows here at 8:30 a.m. We had these 8:30 a.m. data, the non-farm payroll data that came out, and that formed a 1 minute buy side imbalance, sell side inefficiency, fair value gap, a BISI. And that essentially I was looking for that to be a place price would return into, because it was below our discount level, right? I was watching for price to return into here before sending us higher. So what I did essentially was, waited before. I don't like to buy often before the opening bell at 9:30. So I kind of waited until the 9:30 bell, just kind of watching. And as the market was trading, I noticed we were engineering liquidity, right? So we're forming these equal lows, these relative equal lows. And the market usually, when it does that, it's because it's waiting to go manipulate them, right? So you can see this was all low resistance liquidity that was formed here. So the market, right at going into the opening bell, we kept trading higher before, right at the opening bell, we pushed down and swept these lows, right? All of these lows were swept here right at the opening bell. So I'll go ahead and mark these lows here. All these lows were swept. So, there was stop losses that were below these lows because a lot of people were bullish after seeing this. A lot of retail traders were bullish after seeing this, right? This huge candle up, we come into a premium. A lot of retail traders set their stop losses below these lows. So the market pushed down. It took those lows, and then we continued higher. So now at this point, it became a matter of finding an opportunity to buy long. The first great opportunity to go long was actually here, off of this order block here. This series of down close candles forms an order block at the opening price of the highest one, a bullish one. So you can see the market opened here at 9:32, traded down into it, which was a great buying opportunity, and then we continued higher. However, I didn't really like that entry, particularly because of how low I would have had to have my stop loss on this. I would have had to have a pretty wide stop loss, more comfortable than I'm generally like having. Yes, it still would have been a 2-to-1 risk to reward. What was the market looking to trade into? Well, we had our all-time high liquidity that was formed here, right? This was the high of that dealing range, which was also just happened to be the all-time highs. So that formed some buy-side liquidity that essentially would become a great draw on liquidity for price. So I could have entered there targeting this, still above a 2-to-1 risk to reward, but I just didn't like that wide of a stop loss. So I didn't take that entry, and I waited potentially for another one. So the market traded higher, and what happened here was we actually formed another order block here, a much smaller order block. And so I'll go ahead and mark that here. This down close candle formed an order block. And so what I wanted to see was price return back into this and not close below it. So as you can see, we did trade below that, but we didn't close below it. We just wicked it and we came back up. So that was a great indication the market was potentially going to go higher, targeting that buy side liquidity at the all-time highs at 21,567. So at this point now, I didn't take this opportunity, but I waited. And then once we traded above this down close candle, that essentially validated a propulsion block. And I bought 5 NASDAQ contracts, micro contracts, whenever we returned back into this order block. So now my stop loss essentially was much smaller. To invalidate this trade now, it would have only had to come below here and close below here again. So I had about a 12-point stop loss with about a 35-point target. So great risk to reward, nearly a 3-to-1. So I was definitely much more comfortable taking that. So yeah, as you can see, the market then continued to trade back into our propulsion block. But we never closed below it, right? We traded down here, but we never closed below it, let alone the order block. So this trade was never really invalidated. We pushed down to the low of it before pushing right back up, and then continuing higher. So you could see we came back, retested this order block almost, and then we had, now it was just a matter of continuous buy side delivery, right? We had another fair value gap form here. So now if you wanted, you could have moved your stop loss right up here to kind of decrease your risk. And then we had, essentially hit our target pretty quickly. Right there, we hit our target at 9:45 after buying at 9:38. So it was a 7-minute trade, 7 minutes to make over $300. And, you can't be mad at that. Most people, if you got a high paying job, you're making $300 in 8 hours of work, right? And that's considered a high paying job. So to make that in 7 minutes, I can't be mad at that at all. So that was a great trade. We essentially sold there at our target, and that was really it. Really straightforward analysis, great risk to reward, straightforward logic. The market did continue to push higher, but I don't really ever get too caught up in that because, again, the market could have missed it could have, hit our target, and if I was holding, it could have came right back, to get my stop loss. And obviously, your stop loss should be at break even on this, but you can never be mad taking profits at your target, right? If you had a good risk to reward, you can't be mad taking profits at your target. So as the market continued to push higher, I just watched it and enjoyed, but I was already done for the day. That was the only trade I took. And yeah, that's pretty much it. That's all I got for y'all for this one. I appreciate you watching. I will see y'all in the next video.